Hi, I'm Alex. Welcome to the channel and thanks for tuning in. So in today's video, we're going to be talking about Peak Energy Transition Corp, or STPK, and its merger with STEM. Now this is not the first time we're talking about them on this channel. We have discussed them a couple of times previously. This video is more of an update video talking about 3 key developments which we as investors need to be aware of, and which ultimately point to why this company still remains very undervalued. If you've not yet seen my detailed due diligence video on STEM, then I definitely recommend checking that out. It's linked in the description below. And in that video we cover absolutely everything, the positives and the negatives which you need to consider before making an investment. Personally, this is one of the SPAC stocks which I currently hold, which I'm most excited about. And I was one of the first people on YouTube to talk about it. If you're new to the channel and you like investing related content, then hit that subscribe button. My unpredictable upload schedule is not popular with the YouTube algorithm, so often my videos aren't getting shown to people. Make sure you hit that bell next to the subscribe button, and that will hopefully make sure that it does show up on your homepage. If you like the video, please smash the like button. It's so helpful in pushing the channel to a wider audience. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So the first big update is the fact that STEM was recently awarded a large contract. Now this contract was awarded on the 5th of January and is a 68 megawatt hour contract. Now this contract was awarded by the California Self-Generation Incentivization Program, and it accounts for around $35 million of smart energy storage systems. Now obviously a large contract win like this is always good news, it's always important, but in this case it's particularly important. But why is that? So for this point, let's take a quick look at the investor presentation and specifically this slide. Now this was correct to October 2020, and it was outlining the revenue that needed to be won by STEM in 2021 to hit their full year 2021 target, i.e. revenue that hadn't yet been booked for the year but had already been won. As we can see, as of October, STEM only had a further $17 million of contracts to win. Now in the contract that was awarded in January, we know it was around $35 million in size. This ultimately means that STEM has already delivered, it's already guaranteed its revenue target for 2021. In fact, it's already outperformed by 12%. And what's even more positive is that it's only January now. They have a further 11.5 months to win more revenues. That is fantastic news. What's more, this doesn't account for any further revenue wins which were made from the point in which time the presentation was finished in October, and that may have been won during November and December. Ultimately, the crux of the point here is that STEM is definitely going to outperform its 2021 revenue estimates, and that is fantastic news for all shareholders in this stock, and ultimately will drive an increase in the valuation. Personally, I do think we will see an upwards revision to these estimates, which again is great news for the stock price. We have seen a number of SPACs this year, many of them with very ambitious revenue targets, and it's very rare indeed that a SPAC delivers on that and outperforms. However, we've got one here in STEM. What's more, we know that STEM enters into long-term customer contracts, 10, 20-year contracts. And so ultimately outperforming these revenue targets now is great news for that recurring revenue element of the business, the software SaaS piece. Now the second big positive and big update for STEM is the fact that it's likely to be a massive beneficiary from the Biden administration. Now Biden's policies are clearly more environmentally focused, more focused on green energy and green electrification of the grid. And there have already been positive stimulus updates for those operating in the green tech, environmentally friendly technologies and green electrification. And this is all positive news for STEM. Yes, the market has partly reacted to this, but really this is only the tip of the iceberg. Now it really is, and I'm not going to go into all of the detail again as to why this is so exciting. I said again, if you haven't seen my detailed due diligence video on STEM, then I definitely recommend checking that out, where I lay out all the details. However, STEM will play an essential role in the future energy ecosystem. As we transition to green energy, green grids, renewable energies, STEM and similar technologies are essential to achieving that. If you own an EV yourself, or even if you're invested in any EV stocks or even EV related stocks like charging, and you're not invested in Peak at this point in time, then you definitely need to take another look at it. It really is so important, and these are the 2 main reasons very quickly. The first of these is that it reduces the cost of renewable energy. So as we know, renewable energy is intermittent. It's not sunny 24 hours of the day, it's not windy 24 hours of the day. The levels of electricity which it generates fluctuates throughout the day. So when building renewable energy plants and renewable energy capacity, backup in the form of traditional fossil fuel power plants is also built to ensure that the peak capacity demand can be met. What this means is that the cost per unit of energy generated is high and ultimately is not always green. Effective and smart energy storage solutions can eliminate the need for that backup generation to be generated, which in turn lowers the cost per unit of energy generated and overall makes the energy generation greener. The second point is the way it reduces the reliance on the grid. Now this is massive because ultimately the majority of grids are underinvested. There are increasing occurrences of greyouts and blackouts. This really isn't okay, and it's forcing companies and people to think about alternatives to being solely reliant on the grid. Imagine a hospital without adequate backup and storage. In the case of a blackout, key medical machinery may go out of action, ventilators for example, and that can result in deaths. Imagine the same scenario for a data center. That would leave millions of companies and peoples without access to key data. Again, that can cost millions and millions of dollars. Think again of the same scenario at a large sporting venue. Without adequate storage or backup, that could mean the event couldn't go ahead and couldn't be televised. Imagine that happening at the World Cup final or at the Super Bowl. It would cost millions and millions of dollars. It really is so important. So ultimately, STEM and companies like STEM play a key role in the future energy ecosystem. Yes, it may be difficult to get your head around it now, but it is still massively underappreciated by the market. Now, the third update and important thing to discuss here is the fact that STEM has no direct competitor here. Within the market currently, there is no other company which has the same scale and the same proposition which STEM currently has. Yes, there are companies operating in similar verticals with similar propositions, but there's no direct competition here. Yes, I fully expect over the coming years other companies to enter the market and try and capitalise on the opportunity, and that's okay. This is a market where there can be many successful companies, and where STEM is currently positioned, it's very well placed to be one of those. Ultimately, with every new installation of STEM, with every new customer it wins, the differentiation versus its competitors grows and the barriers to entry grow. There really is a benefit here of the first mover advantage. With every new customer that STEM wins, not only does it enter into a long-term contract with them, but it also gathers more data points, more information which it can use for Athena, its AI platform, to become smarter and more efficient. As well as this, it increases the potential for energy to be sold back to the grid and ultimately generate larger participation revenues, or in other words, the virtual power plant proposition. So as investors in STEM, this is really fantastic news, and again, should have a positive impact on the valuation. Now, as part of my diligence on STEM, I have come across a number of key criticisms which people have of the stock. Now, I'm only going to touch on these very quickly. However, if people are interested, I can go into more detail on why I disagree in another video, so please let me know in the comment section below. However, fundamentally, these revolve around three core arguments. The first of these is the fact that the software part of the business is very small. Now, yes, this is obviously the case if you look at it on a purely revenue basis. However, as the business grows, this scales. Ultimately, given the mix of the business, you can't look at it on purely a revenue basis. You have to look further down the P&L. You have to look at the margins, the gross profit it generates, and ultimately the EBITDA that both parts of the business generate. That's when you get a better understanding of the business and see how important the software side of it is as well. And what's more, you're not paying a software multiple for this business. So I can go into that in much more detail if people are interested, but I fundamentally disagree with that argument. The second argument I hear is that Tesla's VPP is going to destroy STEM. Again, I disagree with this. Tesla has a slightly different focus and a slightly different proposition. It's more geared and more skewed towards the consumer market. STEM is purely B2B. Ultimately, on this point, I think both can and should exist side by side. I'm not at all saying that the Tesla proposition isn't fantastic. It is. It's exactly what we need to transition to a greener grid. However, the companies have different focuses and both will exist alongside each other. And the third argument I have seen a bit of online is the fact that global warming is a scam and this is a pointless technology. Well, on this one, watch David Attenborough's latest show, A Life on Our Planet. It's on Netflix currently in the UK, and come back to me and say that you still don't believe in global warming. Now, I don't want to turn this into an environmental debate, but even after watching that, you still don't believe in the case. The one thing you can't argue with is that the geopolitical focus globally is towards a greener environment and tackling the carbon emission crisis. That focus itself should create a compelling enough investment case for you to be investing into the sector. Ultimately, the last thing we want is another virus somehow emerging from the melting permafrost, and I'm sure I'm not alone in saying this, but I'm really looking forward to having some normality back to life. But look, thank you so much for watching. I hope you enjoyed the video. If you did, please hit the like button. If you're new to the channel and you like investing related content, then hit that subscribe button. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear everyone's perspectives, opinions, debates, so please get involved. Thank you so much for watching, and I'll see you in another video.